Churchill, thank you for making time.
Thank you, Ndero, for having me on the show today.
Great. One might argue that COVID-19 was a bag of mixed fortunes for the stock markets and different investment portfolios. How so?
Thanks for sure. And not to state the obvious, COVID-19 had negative impacts in the capital markets. Just looking at broadly the themes that were impacted just as a result of COVID-19, I see that some of the investors, as they come to have ownership stake in the listed companies, one of the things that they're looking at is the prospects of getting dividend payments. And we saw a number of companies not getting into that route of announcing or issuing dividend payments, be it interim or even the final dividend, and we still expect that to play out just on account for the companies trying to build their capital buffers. So that's one of the things that has now led to that kind of announcements. And I remember just at the start of the pandemic, a number of the companies had issued dividend payments. Some of them had to withdraw or to reverse that dividend payment announcements. So right now, still, COVID is still not been fully smoothened out, and we still expect that that will be the other thing playing out. And of course, the other thing, sorry, in terms of the companies, we've seen a record number of 19 companies announcing profit warnings within this 12 months period, just on account of COVID-19. So that's just to give you a sense of the impact of COVID-19 on the listed space.
Now, in terms of shifting the scales of balance, particularly at the NSE, how does it look like, and how is NSE absorbing that shock?
NSE has gradually managed to absorb that shock. To be sure, just looking at the numbers, we saw that the Nairobi NSE 20 shares declined 30% last year, and Nairobi All Share Index declining another 9%. The market cap rebounded. Just looking at the statistics, in the first quarter period, it declined 23%. That's the market capitalization, just giving you the impact of the decrease in prices as a percent, and then multiplied by the overall shares. So that is where the market cap comes about. And it declined 23% in the first quarter, but it rebounded and it closed the year at 2.3 trillion from 2.5 trillion at the start of the year. So that's just telling us there was some rebound in the prices of select companies from the horrors, quote unquote, on what we saw when the pandemic was quite acute in the country.
At a global level, however, COVID-19 was also just a bag of mixed fortunes. Let's begin with those who did exemplary well. Their stocks and investment portfolios that did well, particularly in the biomedical space and technology space.
Yeah, sure. Those were the winners last year, the biomedical and also the tech space, say companies like Zoom, whereby right now people are into remote working, and those kind of sectors were the biggest winners last year. And also locally, we are seeing that the telco, Safaricom, had a decent run last year. Of course, it declined to lows of 24 shillings per share, but it has steadily rebounded. Even that has spilled over into this year, hitting highs of 39 shillings and 25 cents in the course of this year. So that is just solidifying the argument that the tech sector has been the biggest winners. Of course, on the flip side, there are also losers, which has been quite a replica of what's happening in the global environment. The hospitality stocks, say TPS, Serena, and even the brewery, the EABL has also declined even in that period of COVID-19. So that is also replicated even in the listed stocks that are aligned to those sectors.
Let's briefly talk about return on investment. When a stock soars as high as Zoom did, 400%, what kind of return on investment does it have? And even on the stocks that massively lost some of their weight, what impact on investment does it have on some of the investors?
Well, to be sure, we have, depending on the where you are, if you're holding a stock that has an outsized run, definitely it will mirror to your portfolio or in your investment allocation. And just looking at 2020, where we have the full year numbers, over and above the COVID-19, which most investors were looking like, okay, it is what it is. But now people were looking, or the investment winners were even dictated with some other factors. And locally, we saw that with COVID-19, of course, gold ETF, the ABSA gold ETF, rebounded. It went up 37% last year, but this is because of the risk-on sentiment towards gold, because it's been perceived as a safe haven. But you see stocks like Nairobi Business Ventures are having a 5 times return from the start of the year. Is just telling you that corporate announcement also played weight. That was Nairobi Business Ventures. So imagine that the stock you had, and then at some point the stock was suspended, and then it was reinstated back in December, start of December. So that was propelled the positive sentiment on that stock. Akabasid, the same thing, the momentum, just because of the buyout on BOC gases, it had a steady run. It returned a 46% return. And Kenya Airways, despite the fact that it was to be nationalized, just before it was suspended, it had a run of 39%. So it's just telling us that even the announcements related to the specific stocks has had a positive run on the names that have been affected.
Mm-hmm. Two things before we wind up. The dollar gained 7% over the Kenyan shilling. How did this affect those who are dollar account holders and Kenyan account holders, Kenya shillings account holders?
Yes, that by itself is just telling you that your investment has had a return on 7%, even without looking at the performance return. So already you're 7% just because of that 7% appreciation on the dollar against the shilling. So that is one thing. So you find that some of the investors, particularly the local market, you see that the foreign investors, their total shareholding is 17%. But if you look at the daily turnover statistics, you find that they control up to 60% on any given day. So you find that the foreigners, they were benefiting on two fronts. Ideally, one is that on the dollar, because as it appreciates, had they come in before the appreciation, so they can be able to realize that 7% on the dollar, and also the stocks that they invest into. So I'm imagining a foreign investor who came in right when the prices had bottomed. So we're looking at end March, and then they held those stocks up until the end of the year. So they are benefiting on two fronts, on the dollar appreciation and also the performance of the respective stocks that they are on their portfolio.
Mm-hmm. Finally, COVID-19 has brought forth the success of non-traditional stocks and Class 8 assets. 2021, where does one bet their money?
Well, there's been those quote-unquote exotic instruments that people are looking at. Top of my mind is now the cryptocurrency. We still don't have that kind of experience as capital markets participants into that, but I know that for the investors, there are something that they are not avoiding. But just to take you back to the capital markets as it is, the quote-unquote traditional capital markets, we are looking at fixed income. There's still some legs for fixed income to appreciate. Looking at where we started the year, we've seen that the yield curve has gone up, and in layman's term, it means that your bond prices has reduced. So we are seeing that at some point we'll start seeing that the yield curve will start coming down. So this is the right opportunity for any investor who's looking at the fixed income also to look to get into at the moment when the prices are a bit cheap, so that they can be able to ride the curve as it goes up. So that's my parting shot, fixed income at the moment.
Mm-hmm. Churchill, that's where we leave it. Thank you very much for making time.
Thank you, Ndero, for having me on the show today.
Thank you.